I just had one of my best months trading options, making a 30% return for the month of April. So in this video, I'm going to give you a recap of a few of the trades that I made. After that, I'm going to give you a few predictions for May and some of the trades that I still have open. This is a spreadsheet that I use to track every single trade that I make. And if we look at the month of January, I actually ended up losing $1,200 because I bought a bunch of call options that expired worthless because of the bear market. In February, I made $2,100. In March, I made $1,400, and in April, I made almost $1,100, which is the slowest month in terms of dollar amount, but I was only using around $3,000, whereas previously I'd been using between $6,000 and $10,000 for the months of February and March. So as a percentage, April has been my best month with over 30% returns. And if we go through my trade log for the month of April, these are all the different trades that I made. And I'm not going to take you through every single one of them because then this video would be probably an hour or two long. But I'm going to take you through my biggest winner, my biggest loser, and my biggest regret. So my biggest winner was $191, which came from this QQQ Iron Condor. And if we go to Robinhood, this gives you the details as to how I opened this. So I got $195 of credit to open a short iron condor by selling a $330 call. I bought a $335 call against it, and then I bought a $305 put option, and then I sold a $310 put against it. So my assumption with this short iron condor was that QQQ would be anywhere between my $310 strike price and my $330 strike price up top. And the reasoning behind this was that this week we had earnings, and a lot of the companies that I saw having good earnings reports ended up trading flat. So my assumption was that QQQ overall would have a good earnings season, and most of the stocks within the top 100 stocks in the NASDAQ would trade flat. I opened this at 11:25 a.m. If we look at the charts around this time, QQQ had been trading around $320, and again, I was assuming that it would trade anywhere between $310 down here and $330 right around the top, and that's just about the range that it stayed in all week. And the reason why I assumed that it wouldn't move more than $10 in either direction was by looking at the trade tab under options, and this is the expected move for every single week. Now, whenever I opened this had been around $10. So I was assuming that the market would stay in between that risk range. I ended up closing this trade on Friday at around 1:30 p.m. And at that time, QQQ had been trading for around $318. So these options had become pretty much worthless. I ended up buying them back for $4, and again I got $195 in credit to open this trade. So overall I took $191 in profit for this one trade. And then my biggest loser for the month was $75, and this was actually my only loss for the month so far, at least, because I do still have some trades open, but this was on Facebook. So my assumption with Facebook was based on what happened with Netflix about 1 week before. Netflix had a really bad earnings report. Their stock fell by like 30% after the earnings, and it was an absolute bloodbath. And Facebook was kind of following the same pattern, so people were making the same assumption as Netflix, that Facebook would have this really bad earnings report, that they would lose monthly active users, and their stock would go down. So if we look at this trade, I opened, again, another Iron Condor. My assumption was that Facebook would be between $185 and $210 on my expiration date. So if we go to Robinhood, you can see this trade. I opened it for $480 credit. So I sold 3 $210 calls. I bought 3 $212.50 calls. I bought 3 $182.50 calls, and then I sold 3 $185 calls. So I was assuming that it would be between my short strike prices of $185 and $210, and it was 11 a.m. on April 22nd whenever I opened this. So looking at the charts, my assumption was that Facebook would stay above the point that it was already at, but then it wouldn't rally a ton because, again, a good earnings report usually equated to a stock trading flat. And if we look at the charts here, I was actually right on my assumption that it would stay above 185 and be below $210. So I actually could have made max profit, but I ended up chickening out at the last minute. It was trading around $170 on the close of the day of the earnings report. And my assumption was that, well, if a good earnings report equals a stock trading flat, then it would be really hard for the stock to get back up to $185. But my original assumption was that Netflix had dragged the stock down to below where it should have been. So again, I ended up taking a loss on this trade. I again sold it for $480. I bought it back for $555, taking a $75 loss for this trade. And had I held this, I could have made that full max profit of $480. So that is a bit disappointing, but I have an even more disappointing trade that I ended up taking on, because this one I was actually risking quite a bit of money. I was risking $270. So that's part of the reason as to why I closed it. I didn't want to lose almost $300. But my biggest regret for this month was this Apple trade right here. So I opened a iron butterfly, assuming that Apple would be at my $160 strike price on the expiration date, which again had been this Friday on 4/29. So same assumption here, that a good earnings report meant the stock would trade flat. Apple had been trading around the $160 mark pretty much all week. And if we go to my history for Apple, I opened this for $410 of credit. So the way that I opened this was by selling a $160 call. I sold a $160 put. So my assumption was that Apple would be a $160, and then I gave it $5 in either direction by buying a $155 put and then buying a $165 call. So again, I got $410 in credit, but my collateral was only $500. So this means that I was only taking on $90 in risk to put on this trade, and I could have made up to $410 on this assumption. Now, Apple didn't end up trading at $160 to close the day on Friday. It was actually at $158. But if we look at the price charts, right around probably 2 or 3 p.m., there was a period where Apple was dead flat around $160. But I had actually taken profits on this early in the morning when Apple was going up and actually seeing a bit of a rally. So I ended up closing right around here, and I closed this trade for $360. So I only took $50 of profit for this trade, but had I held it closer to the end of the day, in that 1 to 3 p.m. area where I was trading around $160, this trade could have been $200 or even $300 in profit. So that means that I sold myself short of, $250. So that was my biggest regret for the month. I really wish that I had actually held this and kept that same assumption that a good earnings report meant that the stock would trade flat. But again, I ended up chickening out of this, just like I ended up chickening out of Facebook. But overall, it was a pretty good month. Again, I made $1,100 almost. And in terms of my win rate, this has been my best month, making 93% of my trades profitable. And previously, if we look at the stats, again, this has been my best month, 91%, versus March, 78%, February, 81% almost, and then January, 87%. But I do still have some trades open, which kind of leads me into my predictions for the month of May. So some of the trades that I still have open are this Bank of America call debit spread expiring on 5/20. And the reason why I opened this trade was that whenever yields go higher, usually banks end up making more profit with a higher APR. But that actually didn't end up being the case for Bank of America, and pretty much all the bank stocks have been going down kind of in tandem with the rest of the market. So this trade I probably wouldn't consider, but I think that this one actually might be an interesting one that I'm actually looking to hold. So this is a USO call debit spread expiring on May 13th. And my original assumption on this was that China would probably ease up on their COVID lockdown that they're experiencing right now. And it's taken a little bit longer than I anticipated, but There's also another driving force for oil right now, which is EU proposing to ban Russian oil. So this would probably end up driving USO and a bunch of other oil stocks up. So if we look at USO, right now it's trading for $78. Yesterday morning it was trading at $79, so it was getting pretty close to my $81 strike price. And I think just because of the pressure from the EU and possibly maybe China opening up, I still think this is a play to hold. USO only needs to move about $4, and I opened these for $35 in credit each, so I spent around $105, which isn't a ton of money. But if I'm right about this, then I can actually turn that $105 into $300, or the difference between my strike prices multiplied by the number of spreads that I opened. Another good trade that I still have open is expiring this week, and this is based on the FOMC meeting, which is on April 6th. So this trade, I ended up opening this after the IMF meeting where Fed Chair Powell had confirmed that he was going to do a half-point rate hike. So my assumption is that the bond markets had already priced this in, and that TLT would be mostly flat. So I ended up opening another iron condor, assuming that TLT would be between $125 and $115 by this FOMC meeting. And my assumption with this FOMC meeting actually is that we're not going to see as much pain as people are predicting, because the markets have already priced in a half-point rate hike. Now, if we do get a 75 basis point hike, or 0.75%, then that could be bad for the market, but I think that the likelihood of the Fed doing a 75 basis point hike is extremely low. There's around a 99% chance of them doing a 50 basis point hike, so I'm not very worried about this, so I'm assuming that this trade will probably work out for me. And another trade that I made based on this FOMC fear that we're experiencing in the market right now was this QQQ call debit spread. And this one expires on May 13th, so a week after the FOMC meeting. And again, I'm thinking that the markets are a little bit overly fearful of this FOMC meeting. So my assumption is that this FOMC meeting is going to be a nothing burger, and it's going to end up taking volatility out of the market, which could end up in QQQ and SPY going up. So I opened a call debit spread for QQQ, assuming that it would be above $315. Right now it is trading below that at around $314. But again, I think that this FOMC meeting is going to be nothing to worry about. And finally, the last trade that I made for this month that I still have open at this point was an AMD Iron Condor. And I'm assuming that AMD will be between 82, and this is actually supposed to say 98, not 88, by the end of next week. So AMD is going to be having their earnings report on Tuesday, and I'm running under the same assumption that I was last week, where a good earnings report means that the stock trades flat. So if AMD does have a good earnings report, I'm assuming that it will probably stay below its $82 low that it's seen over the last few weeks. I don't think it's going to go below that. But again, I think if they do have a good earnings report, I think it's really unlikely that they're going to go above $100. I think that in this market, we're very much in a risk-off market where even if a company has a really good earnings report, people aren't going to drive that stock up like they used to. But maybe I'm wrong about this. Honestly, I kind of hope that I'm wrong because I have 150 shares of the company, and I would love to see it go back above $100. But at this point in these market conditions, it doesn't seem very likely. So I opened 5 of these for $45 each, so I could make around $225 if I'm right, but I'm also risking $55 for each of these spreads times 5 for a max loss of $275. So we'll see how these trades end up working out. Let me know what you think of my reasoning and my expectations for this month. Thanks for making it all the way to the end of this video, and thank you to all my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.